How do internal auditors support risk management in an organization? By evaluating the effectiveness of risk governance, compliance, and control measures, by setting a strategic business goals, by directly managing financial risk portfolios, by making investment decision. तो इंटरनल ऑडिटर का जो मेन काम होता है वो जीआरसी का होता है, रिस्क गवर्नेंस कंप्लायंस एंड कंट्रोल. सो द आंसर शुड बी ए. Which of the following best differentiate a risk manager from a risk owner? Differentiate a risk manager from risk owner. Risk manager focuses on overall risk operation, while risk owner is accountable for specific risk. The answer is right. Risk owners lead the internal audit function, while risk owners oversees financial risk. No, risk manager responsible for compliance, while risk owners handles governance. No, risk owners sets the corporate strategy, while risk manager conduct external risk analysis. No, so the perfect answer should be A. What is the primary objectives of risk identification in the risk management process? To create an audit trail for financial reporting, to identify and document potential threat that could impact an entity objectives, yes. To eliminate all risk, no. To ensure regulatory compliance, no. So the answer should be B. Which of the following is an effective method for risk identification? Only using historical financial statement, no. Conducting SWOT analysis and creating a risk register, avoiding external stakeholder involvement, relying solely on intuitions. So the best and effective method for risk identification is SWOT analysis: strength, weakness, opportunity, and threats. So the answer should be B. In risk evaluation, what does the formula level of risk equal to consequences into likelihood? The financial impact of a risk on a business, the ranking of risk based on severity and frequency. A method to eliminate risk permanently, no. A legal requirement under corporate governance, no. So the answer would be B. In the likelihood scale of risk evaluation, which level correspondent to a risk that has occurred every 10 years or more in the industry? Level 1 very unlikely, level 2 unlikely, level 3 likely, level 4 very likely. So the answer should be every 10 years or more in likelihood of risk scale. So the answer should be level 2 unlikely. Which of the following risk quantification tools involve experts providing independent judgment until a consensus is reached? Simulation analysis, Delphi approach, decision tree analysis, no. Expected monetary value, no. Simulation, no. The answer should be B. Delphi approach. In a risk prioritization, a risk with a rating of 12 to 16 on a heat matrix requires what type of actions? No need of action is required. Action within 1 or 2 months, no. Immediate corrective actions, monitoring without intervention. So the answer should be C, immediate corrective actions. How does the Monte Carlo simulation assist in risk management? By predicting single point risk outcomes, no. By evaluating multiple risk scenario, yes. Through repeated simulation. By eliminating all potential financial risk, no. By identifying only operational risk, no. So the Monte Carlo simulation is evaluating multiple risk scenarios. So the answer should be B. What is the key difference between sensitivity analysis and scenario analysis? सिनेरियो एनालिसिस बेसिकली डिफरेंट सिनेरियो के बेस पे एनालाइज करते हैं, और सेंसिटिविटी में ये होता है कि एक एक चीज़ मतलब फैक्टर को चेंज करके करते हैं. So, देखते हैं. Sensitivity analysis examine multiple variables at once, while scenario analysis changes only one variables. No, sensitivity analysis changes one input at a time. Yes, while scenario analysis examine multiple input together. Scenario analysis is qualitative, while sensitivity analysis is quantitative. No, sensitivity analysis does not impact decision. So the answer should be B. Which of the following is an example of qualitative risk analysis technique? Example. Expected monetary value EMB, no. Simulation analysis, no. Heat map. Value at risk, no. So the qualitative. So the focus should be qualitative. Okay. So the answer should be C, heat map, risk matrix. Which of the following statement is true about decision tree in risk management? It is used to visually map out risk scenario and decision points. The answer is yes. It only apply to financial risk evaluation. No. It eliminates uncertainty from business decision. No. It does not consider probability in decision making. No. So the answer should be A. Which of the following best defines risk appetite? The level of risk an organization is willing to accept in pursuit of its objective. The absolute elimination of all risk. No. The strategy to transfer all risk to external party. No. Detailed process of identifying every potential risk. No. So the answer should be A. How does risk appetite differ from risk tolerance? Risk appetite and risk tolerance. Risk appetite is set only for short-term initiative, while risk tolerance applies for to long-term strategy. No, risk appetite is broader and strategic. Yes, whereas risk tolerance a specific acceptable limit for particular risk. Risk tolerance a specific acceptable limits for particular risk. Risk appetite is expressed quantitatively, whereas risk tolerance is qualitative only. There is no difference. So the perfect answer should be B. All the answers are incorrect except B. Which of the following factor is least likely to influence an organization's risk appetite? So, which of the following factors is least likely? Nature of the industry, stage of company's growth, financial strength and resources, company's logo design. So the answer should be D. When the cost of implementing a control exceeds the benefit gained from reducing a risk, the most appropriate treatment is to terminate the risk by stopping the related activity. No. Transfer the risk through insurance. No. Tolerate the risk while preparing a contingency plan. Treat the risk by applying extensive control. So the answer should be C. Cost of implementing control exceed the benefit gains. Which method is commonly used to transfer risk to a third party? Increasing internal control. No. Purchasing insurance. Yes. For safety. Eliminating the risk by terminating the activity. No. Accepting the risk without action. No. So the answer should be B. What distinguishes the terminate risk treatment option from treat? Terminate from treat. Terminate, eliminate the risk by ceasing the risky activity, while treat involve managing risk through controls. Terminate, eliminate the risk. Terminate, eliminate the risk by ceasing the risky activity. Yes, while treat involves managing risk through control. Terminate, reduce risk to an acceptable level, while treat completely transfer the risk. No. Both opinion aim to completely eliminate the risk. No. Terminate is used only for financial risk, while treat is applied to operational risk. No. So the perfect answer should be A, and all the three are incorrect. A well-defined risk appetite statement primarily benefits an organization. Why? A well-defined risk appetite statement guaranteeing the elimination of all risk. No, never. Aligning stakeholder expectations and guiding risk-based decision making. Increasing risk exposure to achieve higher return. Removing the need for ongoing risk monitoring. No. So the answer should be B. What is the main purpose for controlling risk within a risk management framework? To completely eliminate all risk, to reduce or mitigate risk exposure through proactive measures. Yes. To solely transfer. No. To focus only on financial risk. No. So the answer will be in effective contingency plan. Uh, See, most of the MCQ जो देखोगे वो एलिमिनेशन मेथड पे वर्क कर देता है। तुम्हें पता चल जाएगा कि कौन सा मतलब काम करेगा नहीं। जब ऐसे ऐसे वर्ड देखे कि ऑल रिस्क एलिमिनेट ऑल रिस्क, तो ऑल रिस्क सोलली ओनली ये सब पहले ही रिमूव कर देना है। इस टाइप के आएंगे ही नहीं, क्वेश्चन मतलब आंसर हो ही नहीं सकता इस टाइप का। खैर 49 इन अफेक्टिव कंटिजेंसी प्लानिंग which element is essential for ensuring preparedness during a crisis? Ignoring resource allocation since it is not needed for emergencies. Developing and regularly testing a communication plan. Relying solely on historical data without revising plans. No. Eliminating all risk. No. So the answer would be B. Which of the following statement best summarize the relationship between risk treatment and risk control? Risk treatment and risk control. They are synonymous. Both completely eliminate risk. Both completely eliminate risk. No. Risk treatment involves selecting appropriate strategy to address risk. Yes, while risk control focus on implementing and controlling these strategies. Risk treatment is used only for operational risks. No. Risk control is the planning phase, and risk treatment is the execution phase of the contingency planning. No. So the answer should be B. Which asset is often described as the currency of the 21st century? And is which asset? Currency of the 21st century. A capital, B information, C technology, D IPR. So the answer should be B information. It is the currency of the 21st century. What is the primary objective of a disaster recovery plan? Disaster recovery plan objectives: to completely prevent IT failures, no, to restore critical IT system and resume operation after disaster, to eliminate all operational risk, no, to increase annual profit margin, no. So the answer should be B. Which of the following measure is considered preventive in DRP? Installing fire alarm, keeping regular off-site backup and using surge protectors, conducting employee disaster recovery training, purchasing insurance policies. So the answer should be B. What is the key difference between business continuity plan BCP and disaster recovery plan? Uh, BCP focuses on overall business operations, yes, while DRP concentrate on IT system recovery, yes. BCP is only for IT system, while DRP covers financial recovery. No, BCP eliminate risk, while whereas DRP transfer risk. No, BCP is implemented quarterly, while DRP is one-time setup. No, so the answer should be A. Which regulatory disclosures is commonly required in the management discussions and analysis section of annual report? Detailed IT system specification. No. Comprehensive risk disclosure, including key risk factors and mitigation strategy. Yes. Daily operational updates. No. Internal audit manuals. No. So the answer should be B. What is the primary purpose of continuous and periodic risk reporting? To provide a stakeholder with timely update on risk exposure and mitigation of efforts. To replace the internal audit function, no. To forecast long-term market trends exclusively, no. To document historical risk events only, no. So the answer should be A. How does automation? How does automation contribute to effective risk monitoring? It completely replaces the need for human oversight. No, it minimizes human errors and enables real-time tracking of IT system performance. It removes the need for disaster recovery plans. It focuses solely on financial risk analysis. No, so the answer should be B. Why is testing of the disaster recovery plan essential? Why? So they are asking the reasons why it is essential. To prove that organization will never experience a disaster, no. To identify deficiency, validate recovery procedures, and train response team, yes. To increase the overall IT budget, no. To meet regulatory requirements without practical application, no. So the answer should be B. What significant benefits does continuous risk monitoring and reporting offer to an organization? What significant benefit does continuous risk monitoring and reporting offer to an organization? It guarantees that no risk will ever materialize. It enables proactive adjustments and improved decision making based on the current risk data. It solely focus on historical data for audit purposes. No, it replaces the need for any risk management activity. No, so the answer should be B. Effective risk communication within risk monitoring requires which of the following? Technical technical jargon that only IT professional understand, clear, timely, and integrated reporting that align risk data with business performance. Clear, timely, and integrated reporting. Delayed reporting to allow for data consolidation. No. Isolated report that do not connect the to financial or operational outcome. No. So the answer should be B. Strategic risk primarily arise due to strategic risk. Short-term fluctuation in market prices. No. Changes in company's business environment, competition, or technology. Routine operational inefficiency. No. Accounting errors. No. So the answer should be B. Strategic risk. It is the risk due to changes in company's business environment, competition, or technology. Which of the following is an example of a strategic risk? A manufacturing defect in a company's product. Manufacturing defect is not a strategic risk. Competitors introducing a disruptive technology. Yes. A minor fluctuation in foreign exchange rate. It is not. An employee resigning from a company. No. So the example of a strategic risk. So the answer should be B. What is the best way to mitigate business portfolio risk? What is the best way to mitigate business portfolio risk? Investing all capital in a single sector? Never. No, never, never, never. Diversifying investment, yes, across different asset class. Avoiding investment in a volatile markets. Only investing in a government bonds. No. So the answer should be B. Systematic risk. Systematic risk differs from unsystematic risk because systematic risk. Why? Systematic risk can be diversified while unsystematic risk cannot. No. Unsystematic risk impact the entire market. No. Systematic risk affect the whole economy. Yeah, whole market. While systematic risk affect only a specific. No. Systematic risk affect the whole economy. Yes. Systematic risk affect the whole market, entire market, whole economy. While unsystematic risk affect only a specific company. Yes. So the answer will be C. Which of the following is a type of unsystematic risk? Unsystematic risk: interest rate risk, market rate risk, business risk, business risk, purchasing power risk. So अनसिस्टमैटिक रिस्क मतलब ऐसा रिस्क जो स्पेसिफिक कंपनी के ऊपर हो, तो वो होते हैं बिजनेस रिस्क. तो सो द आंसर शुड बी सी. What does sustainable growth rate SGR indicate? The maximum rate at which company can grow its sales without external financing. The minimum profit, no. Maximum risk a company can tolerate, no. So the answer should be A. A company with a high debt to equity ratio is more exposed to high debt to equity. Okay. A company with a high debt to equity ratio is more exposed to market risk. No, business risk. No, debt to equity ratio is basically a financial risk. It's a financial ratio. You will understand in ratio analysis. So it is financial risk. So the answer should be C. How can company mitigate industry or competition risk? Ignoring competitor activities. No, you cannot ignore your competitor. Developing unique competitive advantage. Yes, unique competitive advantage and monitoring industry trend. Yes. Reducing customer service, investing only in short term project. No, so the answer should be B. Which factor is most crucial for reducing product service risk? Delaying product testing until launch. No. Conducting through thorough market research. Yes, thoroughly market research and continuous testing. Ignoring customer feedback. You cannot ignore the customer feedback. Relying solely on historical data. No. So the answer should be B. What is the primary role for key success factors in an industry? KSF. They identify the key elements required to gain and sustain a competitive advantage. Yes. They determine the tax policy. No. They regulate financial statement. No. They measure a company legal compliance. No. So the answer should be A.